With its debut some 2.5 years ago in the beginning of 2008, drcinvests, first available on YouTube and later on iTunes U, has just celebrated its 100,000th viewer. This series was devoted to both basics and advanced topics in investing, and those particularly emphasized for students, practitioners, and even the occasional professor. Some of the notables were there's a lot of information, a lot of it can be ignored. In terms of tax planning, with the usual admonitions as to liability, none. That good tax planning under the current tax law with qualified dividends given special tax treatment, that one might need fully taxable bonds in order to take the income tax deduction for investment expense. Mutual funds were shown regularly to be best done in diversified, no-load, low-expense ratio index funds. We showed how to place orders, did some basics as to present value, looked at stocks, bonds, options, and in the case of options, the recommendation to buy either to speculate or as a hedge was not advised, but instead to use them as in lieu of limit orders to buy or sell the underlying security. To buy a stock, sell a put. To sell a stock, sell a call. We did some of the basics and advanced topics in terms of statistics and looked at foreign exchange and threw in the economic order quantity in terms of being thrifty with one's money. At various times later, a dozen additional topics were added. Notable was that we showed that the addition of the complete set of cash flows associated with financing after tax at its own after-tax discount rate turns out to be a wash and can be eliminated. That the advice to keep your age as a percent in relatively risk-free bonds was certainly borne out in the financial crisis of 2008. We looked a little bit at Nash equilibrium, wherein rational choices were to be absolutely or relatively better, but those turn out not to be the same, and thus gives a real profound explanation as to the differences between momentum and value investors, wherein the former like to get on the bandwagon going upward, and the latter like to look for values bottom fishing. And studies show that both tend to be as good or as bad as another across long periods of time. Other topics included risk-adjusting negative cash flows, and if done so properly with separate risk-adjusted discount rates, is done so in the opposite direction. And an examination was made of dollar cost averaging, in which the first conclusion is you can't avoid it usually anyhow, and secondly, a good controlled simulation showed it did not produce excess returns. In looking back across the last 2.5 years, the top 5 topics were supply and demand and elasticity, analyzing statements, present and future value, and portfolio theory, and the associated topic on developing beta of the security market line. The periodicity, one will note, is strongly suggestive of a semester system, and the age distribution is indicative perhaps of professionals, and not just students, but maybe professors. And we see that the predominance in English-speaking countries has been useful for this series to have been not just local, but worldwide. As we perhaps do this again at our 200,000th viewer, I trust that you will realize that the bullet points you saw here were perhaps twice as many as the entire series and were meant to be kept to a minimum. As always, I will end with, this is Dr. C Invests.